think my computer's frozen, but I'm going to say hello or welcome back, everybody. It's been a good I guess it's been a good weekend. We're ready to kind of get back at it, but there is some bad news, unfortunately, and we're going to have to break it to you. AJ, how are you doing?
Yeah, doing well, thank you. Yeah, as you said, there is a bit of bad news on sort of for the news side today, and also on the technicals as well. There's some bearish signals which I'm not too happy about, but it's nothing that we are not expecting. It's nothing unexpected. We've been talking about this for a while on the charts, the bearish signals as well. So it's nothing to be expected. It's unexpected, but yeah, we'll give you all that information today. So stay tuned for that.
There we go. So I'm just going to start off. I think we should probably visit the traditional markets first, kind of see what it is that we're guess just what we're overall looking at. This I'm going to come back to this later, this economic calendar, but at the moment, as you can see, so right now futures are down in the US, so in the stock market, down a little bit, which is not great, but that's because of this overall Fed outlook that we're seeing here. So that will be very interesting. The dollar is still gaining, which again is obviously going to lead to a bit more uncertainty and a bit more downside.
Yeah, it's not good if we are continuing to see this dollar increase, and I do have that price target as well for the dollar at 109, and that if that is hit, which it is very close to hitting, then we are most definitely going to see crypto come down a bit more as well.
Yeah, exactly. And there is also, I mean, I hadn't planned on talking about it, but I just see that this is in China. There is also a massive concern about what's going on in China and whether their whole economy is going to collapse. I'm sure you guys have seen videos on that topic specifically. If you guys want me to, just drop a comment and I will do one, kind of explaining everything that I've messed up my word there. Anything, to kind of explain everything that's going on, I can do that, and how that might have a massive effect on the rest of the markets. But Europe moving into this risk-off mode, then also, seeing the Nasdaq and S&P kind of falling down quite a lot. We'll go. Actually, should we have a quick look at that? Should we have a quick look at the traditional markets now, and then jump into crypto?
Yeah. Let's have a look at the traditional markets on the charts then. Let me bring up my screen. So, starting off, we've got the Nasdaq here. Now, the Nasdaq, it was looking good. We had this downtrending white resistance level here that you can see on the screen, and we had multiple tests of this resistance. So you can see back here, we had a few tests of that resistance. Then we had a retest of the resistance here again, but we got a slight rejection. But then we did get that initial break towards the upside. That was great for the Nasdaq because then we could start beginning to see more price action towards the upside. But unfortunately, it looks as such today that we could break back below this previous resistance, which act as support, and right now we are getting that break of support, as you can see right here. Not yesterday, sorry, it was Friday. We did actually when we got that close on Friday, we did actually close perfectly on this white resistance level, which would have been great if today we could see a nice bounce, because that would have been a confirmed bounce, and then we could hopefully continue to see this price action towards the upside for that Nasdaq. But unfortunately, it looks as though we are going to break towards the downside today, and especially with this bearish news coming in as well that Ben's going to be talking about. But 11 hours and 48 minutes left of this daily candle, so there is time to get back above there. But as of right now, we are breaking below it, which is very, very bearish.
I think my concern with this as well is that also, because there's going to obviously have been orders being placed, and those would have been in let's prepare for two different sizes, or two different I guess position sizes, and also then the two directions of, if we stay above and we have a bounce off of that, that's kind of like a bounce and then a retest, and we know that support. So it's only a matter of time until the markets open and then all of these orders start getting filled, because there will be people shorting it if we break below this. So it it doesn't feel nice, does it?
It doesn't, no. And we're also seeing this sort of on the S&P 500 as well, which is sort of, the S&P at the moment is sort of being that decider, and I'll show you why in a moment. But again, we've got this white downwards trending resistance level. We can see lots of resistance at this level. Let me just full screen it for a minute. We have lots of resistance at this level, and as of a few days ago, we did actually come up and test it again, and we tested that 200 MA. Now that 200 MA is going to play a big part because I do want to show you a tweet which I've showed you before, but I'll just show you it again. We are getting a rejection from that 200 MA, which is perfectly lining up with that resistance. Now that is incredibly bearish for the crypto market because, as we know, the crypto market does follow the traditional market, and the S&P has seen a rejection from this resistance, and we are coming into support, which is kind of good. Maybe we could find some support along this level and come back up and test this resistance. But if we did break this support, it was incredibly bearish. You can see that we used it as lots of support previously before breaking down, and then we used it as lots of resistance before breaking back up it again. But if we do break below this, I do think we are going to see another major leg down for the S&P. And there are two tweets that I want to show you quickly. So the first one is this one here. I showed you this already, but just quickly, Justin Bennett, he has compared the 2008 S&P crash to the current S&P price action. And what he has realized is that it looks very, very similar. So we've got these red lines on the screen. So the top red line, you can see we got rejected from there. We got rejected from there in 2008, and we are currently getting rejected from it now. Previously got rejected from it. The second one, we got rejected from it in 2008. Currently, we've been rejected from that. And where we are right now is sitting just below this red bottom line here. 2008, when we got a rejection from that level, we saw a massive, massive crash. That could potentially be what we are seeing now, because as of right now, we are getting a rejection from that red line. And looking at this one as well, 2007, 2008, they look very, very similar. And this is where the 200 MA comes in, this orange line. And in 2008, we did get a rejection from that, and we saw a major crash. Then, we came down to the support, broke that support, and then got that major crash. And what we are seeing right now is that exact scenario. So
we're at the support. No.
Exactly, yeah. So we've got a rejection from that resistance, and now we are at the support. So this support is crucial for the S&P. If we do break the support, I do think we are going to see a big, big leg down.
Yeah, and I'm going to add on to that. So as you can see here, I've just brought up so this is still in that same Bloomberg article here. So it does say, caution ahead, Federal Reserve's shrinking balance sheet poses headwind for stocks. So obviously this is looking at the S&P 500. So you can see there is a very, very strong correlation between the Federal Reserve balance sheet and what we see in the S&P 500. So massive jump up in 2008. And obviously that then kind of led to a more delayed jump up. And then, this kind of can just be, it can kind of be forgotten almost. But it seems as though this is slightly acting as just another factor that's almost a leading indicator. So massive jump in the balance sheet, the stock market goes up. Now we're having this kind of retracement in the balance sheet, because obviously, as we know, the money printer has stopped, and everyone, or the Fed, I should say, are now starting to sell off to the tune of about $90 billion a month, selling off their $9 trillion balance sheet. So we are going to see that. So that is something that everybody's keeping their eye on. And I guess another thing that is worth bringing up is everyone is looking at the Fed, and they are looking at, okay, well, how much of a rate hike are we going to have? And you can see this at the moment if you want to have a look at the rest of the traditional markets, should we say. But 75 basis point hike is currently 55% probability, whereas last week it was only 37% likelihood that we would see a 75 basis point hike. And so moving from 37 to 55, it is a bit insane, and it is because of those minutes that came out last week from July's meeting saying, hey, we're going to continue to hike for as long as is needed to bring that inflation level down. So this is going to be weighing on stocks. It's going to be slowing down company growth. They're not going to be able to, borrow. Well, they can still borrow money, but it's just going to be more expensive. So less people there'll be less innovation, less hiring. The jobs market is often a lagging indicator. So once we see that jobs market that will begin to pretty much crash, I think, in the coming months. So I think, with this, we are going to see a bit more kind of bearish news, should we say, for the next week in crypto. And also,
they could be the fundamental, that could be the fundamental news that is needed to break the support, and that is that next leg down that we could see.
Yeah.
So.
All it kind of really takes is just for someone to say, look, in this current climate, like an analyst from, I don't know, Bloomberg, Goldman, JP Morgan, someone like this, to say, look, our outlook is extremely bearish because of the raising rates. We thought that we kind of had our foot, or I guess the Fed wouldn't be as aggressive, but that was last week, and obviously now I think the party is over. So we are kind of seeing, a bit more restriction. Obviously, that's why we got rejected off of those in the traditional markets, and also in Bitcoin as well, because there is that risk-off mentality. And so the risk-off mentality is obviously being shown, not for Ethereum, to be fair, which is actually quite good. So money is moving into Ethereum. This is the anticipation of the merge. Obviously, it's the only thing everyone's talking about in Ethereum. But in Bitcoin, people are not as excited. So this is the institutional money going in and out of certain assets. Selling of Solana, and also of Bitcoin as well, and just a little bit kind of moving into diversified assets. Fair enough. But yeah, mainly Ethereum.
And what we were seeing sort of last week as well is on the charts, we were seeing these big wicks towards the upside. And what I do believe that was these big institutions sort of taking profit at that point from where they bought at those lower levels. So I think that's why we've been seeing a lot of those big wicks towards the upside. Sort of giving us that false hope that we were going to break that resistance, but unfortunately we didn't, and then we got this big move towards the downside.
Well, that's why we saw so many liquidations as well. It was it's crazy, the amount of people, and we went through it on, one of the streams last week. I don't remember which one, but we were showing that we had, I think it was a bit of a fake out. I can't remember which asset. I think it might have been Bitcoin. But anyway, everyone kind of got a bit too excited, and we just had a massive, as we kind of closed up on that, was it a rising wedge or something? Yeah. And so when we, obviously everyone was, kind of taking profits at those levels. And I do think the institutions and the big investors had a big part to play. But keeping on that theme of institutional investors, I just want to go through this. This is a Goldman Sachs, an ex-Goldman Sachs asset manager, should we say? I don't know, employee, I feel like that doesn't really give him any credit. But he comes up with kind of two main reasons as to why Wall Street doesn't understand Bitcoin. One is ignorance of economic history, and secondly, we have the closed-mindedness and lack of perspective. Now, just to kind of, bring this together, what he is saying is that actually Bitcoin does kind of have quite a good level of potential durability, divisibility, recognizability, portability, and scarcity. Don't get me to say that 10 times over very quickly. That won't work. But he's actually saying that a lot of the people on Wall Street, virtually no one has spent time understanding the history or fundamentals of money. For example, they do not grasp the characteristics that made gold historically dominant money because of these things. So I think he's pretty bullish, but his whole bottom line is that everyone just decides to, they're high-performing consensus followers. They're not early adapters, because you have to be someone who goes against the grain. For example, like Amazon selling books online. Like, what a stupid idea when it's never been done before. And so what he's saying is a lot of Wall Street, they're very like straight line. They're not going to be taking any risks, and so what he's saying is that, in places like Argentina, Turkey, Venezuela, Bitcoin adoption has been higher. And it's because the legacy financial worldview is generally contained in developed countries with relatively stable currencies and secure property rights. And so you don't really need Bitcoin or any cryptos for that matter. But I think one element that he hasn't mentioned is that, like, if you're making loads of money from real estate or stocks, like, do you need to learn about Bitcoin? If I'm like a Wall Street analyst and I'm getting paid, I don't know, let's say $300,000 a year, plus I get like $1 million bonus. Like, do you really think I need to worry too much about Bitcoin? Probably not. And I think that is one of the key issues. And anyone who has risen up the ranks are probably going to have a lot more experience and therefore be a bit older. And I think because of that, do they need to worry about this crazy new internet money? Like, not really. So I think that might be a bit of a systemic problem.
Yeah, I totally agree.
Yeah, I think we need to get some degens in there. They should start hiring from Wall Street Bets on Reddit. Do an open day. Just okay, guys. We need to mix it up a bit. Let's get some degens in here. People rolling up in their pajamas and stuff.
Pizza boxes stacked to the ceiling in their bedrooms.
Yeah. Exactly. But anyway, so just to kind of finally wrap up this fundamental section, just mention Australia are going to enforce crypto regulations this year. This is going to be, I think, one of those bits of news where initially it's quite bad, but overall it's going to be better because, without regulations, especially if you're managing someone else's money, you're hardly going to be putting someone else's money into something that's not regulated. And so I think because of that, for a lot of asset managers, which basically hedge funds are, looking at the likes of BlackRock, for example, they do have they've only just incorporated that ability to work with Coinbase. But if you're a hedge fund manager and real estate works, or how the stock market works, it's just a little bit irresponsible and can lose you your job and also put you in prison to be investing in super risky crypto projects. So I think that's one thing that, if it's regulated, that will give a lot more authenticity, I guess, and feeling of security to different investors. But it's we'll see how this all pans out. But the ruling Labour Party reportedly intends to determine which are the most popular cryptocurrencies, determine which are the most, in Australia and regulate them. So we don't know exactly how it's going to work, but I think this would be quite bullish. I would be feeling quite good, for this if I was in Australia. What's your view on regulation, maybe worldwide, but then also in each country?
Of course, over-regulating crypto, I think, would be very bad. But a bit of regulation is what is needed for crypto to be sort of implemented to our lives, 100%. Implemented into our lives, where we're using it on a daily basis. So that little bit of regulation is needed. I think that little push for a little bit of regulation. For us to, as I said, use it in our everyday lives. But too much of it, I think, would be bad for the crypto market.
Yeah, and I think the way that it should be, like I said a couple of weeks ago, I think it's tough to see Ethereum as like a method of payment, because we're talking about Ethereum. Just because of gas fees and everything like this. It probably can be scaled into one. It's arguable. We don't really know yet. But I think regulation should come in the form of maybe to certain different tokens, but the ones that are going to be used by businesses, for the likes of, I don't know, maybe Chainlink. I know Polygon, for example, are working with EY. So those type of tokens, I can kind of see that, and I think that would be good, because although you're regulating them, that means they're then ready to use by businesses, which means massive use case. And that means a massive inflow of money. So that, I think, could be good. But I can just see it quite...
We have to factor in congestion as well. It needs to be a token that has a large throughput if we want to get it used by everyone as a sort of a world reserve currency or something. I think we're a long way away from that, but I think in the future, that's where it could be heading.
It'd be good if we could have it as a world reserve currency. I actually did a video the other day. I think we're like you said, we're a very, very long way away from that. Very long. But anyway, let's get into some charts. what are we first looking at? Should we look at Bitcoin first and see that breakout, how we've kind of landed?
Yeah, so starting off with the 4 hour, obviously we did get that break towards the downside, and I did tell you last week if we did get this break towards the downside of this rising wedge, we were going to see a pretty substantial pullback for crypto. I gave you sort of 3 targets. The first target was 22,700, second target was 20,700, and then the final target is just under 19,000. So that second TP has been hit at 20,700. It literally was hit to almost the exact dollar. As you can see down here, it literally went a few dollars underneath that price target, which was good. But that is not the final price target. I do have that final price target at around $18,900, so around $19,000 at the very bottom of this rising wedge pattern. But what we're looking at as of right now is we are finding a little bit of support at this second TP point, because obviously if we do extend this line out a little bit as well, if we do extend this line out here, you can see that there is some support along that level previously. So as you see right there, 2 bounces off of this dotted line here, while we are finding a bit of support along here. I don't know what's going on with my charts. I do just need to reload that quick. They're spazzing out on me. There we go. So so I did tell you over the weekend I was expecting a slight period of consolidation or a push towards the upside, and what we have actually seen over the course of the weekend is actually consolidation towards the upside. Now, consolidation towards the upside does actually form a bearish flag, and that's what we have formed on this 4-hour chart. Now, with this 4-hour chart, we can take that flagpole from either the top of the very top of this move up here, or you could say the move started here, because we did get that push towards the downside, then a bit of consolidation before the next push towards the downside. So I'm going to take the more conservative price target of this bearish flag. Now, if we did break towards the downside, this could take us down to $18,300. So it would hit that final TP at approximately 19,000. This is in the short term. So if we do break towards the downside of this bearish flag in term, then I do think we are going to come down and hit that final TP of the rising wedge, which is at 19,000 approximately, and then most likely come and hit this price target of the bearish flag on the 4-hour chart, which is sat at $18,450 approximately. So that's what I'm looking at in the short term. What I expected over the weekend did happen. I didn't expect any more movement towards the downside over the weekend, either that consolidation or that move to the upside. We got a bit of both. We got that consolidation towards the upside. It hasn't, unfortunately, well, we have in fact reset the stochastic and the stochastic RSI, but it hasn't pushed the RSI up much at all. But that's to be expected. But what we can expect from here, looking at the stochastic RSI being in that very overextended region, is that a break towards the downside of this bearish flag is looking pretty likely. So I would expect this bearish flag to break towards the downside, resetting that stochastic RSI and hitting those price targets. So that's what I'm looking at on the 4-hour. And that's
I'm going to say here, AJ, this bearish flag looks very, very familiar on those bigger time frames.
Yeah. So this is just a mini version of this big bearish flag here. I've gone through this multiple times with you. Just quickly, we've broken these trend lines previously, where you can see these blue circles. We've broken these trend lines on the RSI down here, and every time we've broken towards the downside, a few days later, we do actually break towards the downside of the bearish flag, because we've had 2 previous bearish flags before this one that's currently formed. And each time we've broken the support on the RSI, a few days later, we broke the support of the bearish flag, and that's exactly what happened this time around. We had the break of the support of the RSI, and then we had a few days later the break of the support of the bearish flag. And we are seeing this push towards the downside. As of right now, we are testing some resistance from previous resistance back here and previous support right here. So if we do get a rejection here, I do think that next support level all the way down here, this next blue support, is the next target, which is sitting at $19,000, which lines up perfectly with the price target of of this rising wedge here. And that's sort of what I'm expecting to happen if we do break towards the downside of this bearish flag here. As of right now, we are finding a bit of support, which is good. But if we can't break back above this resistance, I do think we are going to get that next push towards $19,000. And the technical target, in fact, for this bearish flag is all the way down at 12,000. So we would be looking at this blue support as sort of that safety net. If we could, Bitcoin has to go to 10 to 15 first. Yeah. Possibility, yeah. I think it's a possibility, and because we have broken down of this bearish flag, it's more on the table than off the table than it was last a few weeks ago when we were in this bearish flag. But there is sort of that safety net at around $19,000. Hopefully, we could find very strong support there before, find support there and not break towards the downside of the support. But obviously, if we did break this major blue support here, then I would say that 12,000 is pretty realistic as next target. But as of right now, I am just waiting to see if we can break above this resistance or we get a rejection. If we do get a rejection, then 19,000 is my target. And again, if we do break towards the downside of this bearish flag on the 4-hour, then $19,000 is that target as well. Looking at the S&P, we can see that we are getting another move towards the downside, and it looks like we could get another move towards the downside this week on the NASDAQ as well, after breaking support and getting a rejection from this resistance on the S&P. So if we do continue to see the traditional market fall, then we are most likely going to see crypto fall as well. So we do just have to be very aware of that. And looking at the weekly chart, looking at the stochastic on the weekly, we are in that overextended vicinity. So maybe another push towards the downside is something that's going to be very healthy for Bitcoin, so we can reset this stock side and then hopefully establish that bottom and begin that bull run. But yeah, we're looking pretty bearish at the moment. If we do break this bearish flag, most likely 19,000 is that next target that I am going to be looking at. And again, as well.
No, go ahead. I was going to ask about the DXY.
Yeah, the DXY is continuing to push, as we can see right here. And we are getting very close to the target I gave you of $9. Once we get to that point, there is going to be a bit of resistance. But if we break above it, then there could be even more downside to Bitcoin. If we did break above it, I would say that that $12,000 target is most likely going to happen, because if we do come up there, we'll probably break sort of that $19,000 target if we do break above the $109 level on the DXY. But if we get a rejection from this resistance, then I would most likely expect the crypto market to see a rise in its price.
Yeah, and I'm just going to also mention something else, just in terms of like why I think we'll probably continue to see the DXY continue moving to the upside. And it's just partly kind of what's going on in the news. So this is what we're going to be seeing over the next week. So tomorrow we have, a little bit of news from like Germany and also from the UK, but not really affecting the price of Bitcoin too much. Obviously last week, was it last week? Yeah, we had last week or the week before, just basically loads of news like inflation, CPI, what else was there? GDP as well from Europe. So that moves a lot of money into the US. So in buying US treasuries, for example, the yields went down on that crazy. And I think that's partly why everyone was unsure. So moving money into US treasuries and the dollar. And those assets as well.
Yeah, and we're seeing cash levels are the highest since 2001. I showed this in a previous stream. I'll just quickly show that. But cash levels as well, they're at a high since 2001. So we can see a lot of cash is sitting on the sidelines. And that's why we could continue to see traditional market and the crypto market pull back even further away, even further down as well, because people are holding off. People are just not looking to invest.
That uncertainty.
Yeah, there we go. It brings us right back to that uncertainty, and
people are holding you're absolutely off. Right.
And
And then also what we see later on in the week, which again is just going to add to this level of uncertainty. Durable goods month over month doesn't really affect us so much. Obviously, certain markets it does, but not really the S&P too heavily. But just looking towards the later stage of the week, that's where we're going to have some, I guess, a little bit more volatility. In fact, a lot more volatility, to be fair. So the Euro area ECB monetary policy meeting, it's the European Central Bank going to talk about what they're going to do. But then we're looking at GDP growth rate quarter over quarter. And so this is going to be the second estimate. You can go through it, basically just, GDP, hit me. There's also initial jobless claims. So that's like just the initial amount of people who don't have a job. And I believe that's on Wednesday. Here we are. Jobless, Thursday. Here we go. US GDP and initial jobless claims. So that will probably move the market as well. The traditional S&P, maybe not so much Bitcoin. Well, it will, because it will just change the mentality of, should I be risky or should I be like conservative? And obviously, if you're conservative, you're not going to be buying Bitcoin. And then finishing up the week on Friday, we have the core PCE. And then we also have the Fed Chair Jerome Powell speech. So this is going to be quite interesting. Just to kind of see what it is that he's saying about what's going on at the moment. As you guys know, there's not another actual rate hike for another 4 weeks and 2 days. So, I guess all he can do is say, hey, this is, I think, what we will do. We still have to get inflation. So there's another CPI print and there's another jobless or job levels, like bit of news to come out. So that's going to move the market. But we will see a lot of volatility towards the end of the week. And I just think because of all of this news, people aren't going to be necessarily jumping into things like Bitcoin when, you could have this bit of news here by Jerome Powell just, massively move the market, shall we say. So that will expect a bit of volatility. And I think the DXY will continue to go up. And I think Bitcoin will probably continue to move down.
Definitely, yeah. And just to sort of add on to that as well, we're coming into September.
Oh, yeah.
September in, the whole lifespan of Bitcoin has been the most bearish month for crypto, for Bitcoin, sorry. And as you can see, September tends to be the worst month for Bitcoin. So we do just have to be aware of that as well. And I was just looking at this chart as well, and we're very close to the end of the year. This year has gone
worryingly.
Yeah, worryingly, yeah. This year has gone very, very quickly. My birthday's in December, and it's crazy. It felt like
you're just letting everybody know so that they buy you a present in good time.
Yeah.
Oh, what's my birthday next week? Oh, guys, heads up, yeah. Here's my address. Here's my wallet. Send me Bitcoin.
It felt like it was my birthday a few weeks ago.
Yeah. No, I know what you mean. Like it just, I think like this year it is kind of crazy. I've been saying all throughout summer that I think we're going to see a move to the upside around about that November, December time.
And if you have a look at this chart as well, you can see that towards the end of the year, we do actually have sort of the average percentage previously has been the highest of the all time as well. So it lines up with what you say, that at the end of the year we could see that next push towards. We could see a nice push towards the upside. And previously, as you can see, 53% is the average move towards the upside, and that is the highest out of every single month that we've seen.
Yeah, I am hoping so. I mean, I was kind of going more so on, what was it? Here? No. What am I thinking of? This. Yeah, is this? My mistake. My mind went blank there. But I was, thinking more towards this. These rate hikes haven't been anything surprising. As you guys have known, if you've been on live with us, I have called a couple of them and, known exactly what's going to happen with the market when it does happen. So I think we will begin to see this. So let's just walk through this. Most likely scenario, 55% finishing on that's a 75 basis points will be in this region here, 3 to 3.25. And then if this happens, there'll be a 25 basis point hike here. But if this happens, then that means 75 basis points in September, 25 basis points in November, and then finishing on another 25 basis points in December. So moving from what we just had, which was 275 basis points hike, and then we're going to get another one, then moving all the way down just to a 25 basis point hike. This is what I think will be really, really bullish for the market. And then that'll allow the Fed to finish at 3.5 to 3.75, which is pretty good. It's quite a high level. And also, if they're selling off their balance sheet, it should get inflation kind of under control. I do think, obviously, because of everything that's gone on in Russia, Ukraine, etc., the whole oil that kind of just put like CPI into a crazy level, because like core inflation that involves food and energy, which are kind of two of the most volatile assets that make up the CPI indication. But I think, moving into a 25 basis point hike in November will be very bullish for the market. So I'm hoping that we can kind of stick to this, that we do get a 75 basis point. In 2023, I really don't know, because I'm not going to just, disclaimer here, guys. I'm not saying that we're going to have a massive pump all-time high. That's not the case. I just think getting us solidly above that 30K level is kind of where I want to be end of the year. But then, the market has kind of priced in staying relatively stable throughout the period of 2023. But the Fed have said, actually, we're going to keep going. So that's where there's a bit of a disconnect, because you can see here, most likely in middle of 2023, which is as low as this goes in terms of like time, this is only at 4%. So, if we're finishing the year on, 0.75, there's only going to be a 25 basis point hike for the whole first half of 6 months. This is where I think the market are kind of underestimating, but the Fed are saying, look, we're going to keep going. So that's my little rant, shall we say, about what's going to be happening for 2023.
Yeah, but, I do think we're close to a bottom as well, time frame wise as well. Breaking these major support levels and getting these lower price targets, for me is looking like time frame wise we are very close to that bottom as well. And then once we establish that bottom, then we can start seeing that push towards the upside. Hopefully towards the end of the year, like Ben mentioned, back up to that sort of 28,500, 30K level where there's massive resistance, literally like two-year resistance sitting at that level. So that's going to be a major level to get to break above. But again, we are a long way away from that. So just the waiting game.
I also think that once we get to that kind of 30K level, we'll have a lot of people kind of FOMO in, because they'll be like, I could have bought at 20K, I'm so annoyed. Yeah. Obviously us, as if you guys are following us, you will have seen that we bought at, what did we buy? 17.5K we bought?
Yeah, literally almost the bottom, yeah.
Yeah, it was biblical, tell you, biblical. Should have been on there, should have been there. But if you weren't there, you can continue to follow all of our kind of trading strategies and what it is that we're actually doing, when we're buying, what orders we're buying, how much, why, and how much we're kind of putting into our, I guess it's kind of diverse, the two trading accounts that we have. So yeah, you can obviously do that by following us on Twitter and also hitting that bell notification on the YouTube channel and subscribing.
Yeah, smash that like button as well. It does really help us out as well.
There you go. But just to finish off, I want to say hello to everybody. It's always nice to see people kind of saying hello. Yeah. For example. So hello everyone, and just a quick question from Mike. Where are you guys from? So we're both from the UK, but I am currently in Dubai, and it's not just that I'm lying about my this green screen. I genuinely am, but the view is probably better on the green screen than here. I've just got a really tall circular building out my window, which is not great, but I do have blue skies, which is okay. That's what you are.
That's what I don't have at the moment. I don't think. It's cloudy. Classic England.
Summer in the UK, isn't it? You're like, oh yeah, you get sun. Okay, it's gone. Yeah. But that's our part thing, and it's gone.
3-4 days, and then I don't know.
Yeah, exactly. Yeah, you had your summer. Shut up.
Yeah.
You got one heat wave.
We had two
Oh,
this
good.
year, to be fair. We had two this year.
Oh, there you go. Global
Yes.
warming.
Yeah, that's it.
Yeah, get some more of that, please. But anyway, guys, it's great to have you all here. So yeah, just to recap, pretty bearish this week. A lot of caution to be exercised, and the most important thing is always use a stop loss. You know, got to get that protection.
Use that protection. Yeah.
Yeah, exactly. All right, guys, have a nice day. Thanks for joining.
Thank you very much for watching.